how do you think the brand Bajaj has helped? I know it's AAA rated, one of the few housing finance companies with a AAA rating, but if you could enumerate the ways Bajaj brand has helped, and also in terms of cross-selling, because you have an extensive list of customers, you've got their credit history.
So I think, Rima, the Bajaj brand had been the most essential ingredient in whatever we have built till today. Now, from 2 points, both on the assets and the liability side, I'll take a minute to elaborate on that. On the asset side, specifically the market segment we operate or the customer segmentation we operate on the prime side, or even when we go for a construction finance or lease rental discounting, the brand is a paramount important for the customer to choose the financing partner. There, Bajaj brand as a heritage brand, as an established trustworthy brand, a symbol of a trust, helps us. Then Bajaj Finance as a parent company, their heft in the financial services, their known agility helps us establishing in the mind of the customer, or helps the decision of the customer of choosing Bajaj Housing Finance to be their partner in financing. That's on the asset side. On the liability side, again, the brand helps us to give comfort to the lenders to be able to see out of a 91,000 crore balance sheet, what we had on 31st March, the capital was 12,000 odd crore number. Balance money has to come from the market in terms of a lenders. From the lender, the trust of the brand and the rating also is reflective of a trust, of course, of a performance of the company, capital or the profitability of the company. But the brand helps in the both ways. On the asset side, putting customer mind at ease with the brand they are dealing with. On the liability side, helping us to raise money at a competitive price, which helps us to be competitive in the market to get more customers. Because money, effective reduced cost of borrowing or the optimized cost of borrowing is the most essential ingredient in our kind of a business, which is typically a low margin business, to attract customers.
Indeed, you all did start off by saying one of the objectives of this IPO is to diversify the sources of borrowing. So how much do you think your cost of borrowing could come down by, now that you'll be a public company?
Listing does not bring down the cost of borrowing, because we are already a AAA rated, and I don't think there is a high rating in the country beyond AAA. What Sanjiv was referring, the diversifying cost of the methods of capital. So our cost of our borrowings are already diversified. We use a mix of banks, to National Housing Banks, Refinance, which is who's our supervisor, to the money market, to the CP. So we use diversified borrowing mix. Cost of funds is not going to be impacted by the listing requirement, because there is no differential as far as it is concerned, but we diversify our source of capital as we continue to grow forward.
Are you seeing any signs of stress in the market right now? Your asset quality is best in class, pristine, if I may use that word. But are there any signs of stress?
No, not in the housing finance space. In the segments that we are in, a combination of very thoughtful acquisition strategy, leveraging data, leveraging analytics, has helped us ensure that the business that we have built in the last 7 years, and even as we see it right now, is of high quality. So these are also choices, Rima, to be made. And you asked a question on affordable housing finance as well. Now, as we build out each of these business lines, we are also thoughtful to not just do everything together, because then you end up taking disproportionate risk. We are balancing it out by building the teams, building the tech capabilities, the distribution ability, trying to understand what customer segments we need to participate in, and that way gradually build out each of these lines. And as we gain more experience, and I'm sure we make some mistakes, we learn from that and apply that back. And that's been our learning from Bajaj Finance over the last 17 years, and our learning from housing finance the last 7 years.
Okay. What is your view on your net interest margins? In Q1, it dropped on a year-on-year basis. What's the outlook over the near term?
We can't talk about the future outlook on the names, but in a mortgage business, which is a variable asset, 100% variable, so the construct of our business is that the asset side is largely variable. Most of the assets are variable or the floating rate of interest, while the liabilities are part variable, part fixed. So in the times of at a point of a time, there can be a bit of a mismatch in the spread being higher. So in fact, I'll call out that FY23 was a higher spread, FY24 was a normalization of a spreads from compared to FY22. You compared FY24 to 22, it was a normalization of a spread. FY23, because the liabilities took some time to catch up on the to have the cost of fund. So as of June, it is balanced between whatever the flow through of a liabilities had to come. At a cycle level in the mortgage, because it's a longer tenured business and a differently natured business of a variable rate on both sides, assets and a liability side, I think over a cycle, their margins remain stable. In a quarter or in a year, there can be pluses and minuses.
So around 4% NIMs, is there any reason to believe it should not be?
Cannot
so margins should remain stable, according to you?
Margins by and large remain stable through the cycle.
Through the cycle.
Through the cycle, not at a point of a time. At a point of a time, it can vary.
Okay. So your valuations are about 3 times price to book, which is at a premium to peers. I know this is advised by the bankers and you all go with it, but do you think you've left money on the table?
Well, we'll find out.
Your own view?
Our own view is to build a high-quality, balanced business and to balance out the requirement both of new and existing shareholders. Eventually, there are a large number of retail shareholders of Bajaj Finance which have promoted this company, and both should benefit, and we think that's what we've done.
So both should benefit. So that means you've left money on the table.
We'll find out.
We'll find out. Okay. Just one final, a few more questions on the business. Now, about 85% of your business is concentrated in a few states. I think Maharashtra, Karnataka, Telangana, New Delhi, etc. Would you look to diversify your geographical presence? Is that something which is on the cards?
So, Rima, when we look at the construct of the market, and specifically when we are calling what you called out that we are more focused, we had been more focused on the prime mortgage space, and coupled with recent discounting in the construction finance, that business is naturally more concentrated towards top 6 metros in the megapolis in the country. So that's what the market side, the way the market is constructed in the space, what we operate in is what is reflected in our book when you see the concentration. Of course, over a period of time, we had always grown geographically in a gradual manner, because being a value business, not a volume business, the geographical expansion is always gradual. We had been gradually expanding. We'll continue to expand gradually to cover from a market coverage point of view. But value-wise, it is going to be concentrated in the way the market is concentrated.
Okay. This is a very competitive space, Sanjiv, and you said that there hasn't been any let-up in terms of the competitive intensity. What, according to you, is the reason why Bajaj Housing Finance has grown so much faster? I was seeing the comparison of your peers. So LIC Housing Finance, the one which is bigger than you, has grown at 8.5%. PNB has actually declined in terms of the growth rates. Canfin Homes is about 15%. What, according to you, is the reason?
There are a combination of factors, Rima. One is a home loan in India is a loan against a home that you're staying in. For most people, it's not an investment property. And hence, to have a housing finance company or a bank that you can trust through the period of your loan becomes important. And we've been fortunate to have the Bajaj brand name. So it helped us start at a good point. Second, the market itself. While the market is competitive, the market is very large. And the challenge, as we've built our business, is not so much on the asset side. The challenge is, can you build a large liability book? Can you create confidence amongst your borrowers to be able to build this kind of size? And I believe we've managed to do that so far. And as Atul mentioned, the diversified nature, not only on our asset side, but also on the liability side, not only increase the sources available to us, but also reduce risk through that diversification. And then it's a combination of our insights into customers, it's a combination of leveraging data to understand which micro markets, what kind of product is suitable, what is the right ticket size, what is the right distribution strategy, and then our tech capabilities for quick turnaround times. So the customer will still take a certain amount of time to decide on the home, but everything else, if we can reduce friction in their lives in getting a housing loan from us, we believe that gives us a little bit more advantage than with everybody else. Because the pricing is very much, if you're in the prime segment, if you're in the affordable segment, the pricing is very much similar, because again, this is a long-term expensive loan. And you risk that if you get too much out of the band, you risk adverse selection as well. So this is not so much a game that works on differential pricing. It's on everything else.
And one final question, since you spoke about the softer aspects work in a customer choosing who they will bank with, how long does it take now to get a home loan finance? Because everything's getting quicker. We're in the quick commerce business world. So how long does it take now compared to what it did, say, 3 years or 5 years back?
You know, so the process from us can be through the digital side of what we do fairly instantaneous. But customers still on average takes 30 to 45 days to decide on the apartment. This is a lifelong decision. And naturally we don't influence and try to influence that. But before and after, the rest of the process happens very seamlessly. And other than a few steps which require interaction in the physical world, everything else that can be digitalized is digitalized.
Amazing. Thank you, gentlemen. This has been a great conversation, an eye-opener. Wish you all the very best. Thank you.
Thank you.